Okay, we're only about 6 weeks away from the major mortgage changes through CMHC. Let's cover out some details. I've been talking to executives at the insurers and looking into all the details and also hearing some odd ideas coming out of some places. So let's set the record straight. So on the December 15th, there's another different thing happening in the middle of January, but we won't worry about that today because hardly anybody would ever get involved in it, although it's going to be interesting. That's all I can say. The January thing about the refinance for building out rental units, it's going to be wild. But let's concentrate on the one that's only 6 weeks away, even less than 6 weeks, which is 30-year amortization for low down payments. Everything I'm talking about now, let's call it a CMHC high ratio mortgage. You're putting less than 20% down payment, which is the normal requirement, and it's a government-backed insurance program. You're paying some huge premiums, tens of thousands of dollars in premiums, which are added to the mortgage. You don't actually write a check for them, but they are added to the mortgage. So you're sure as hell paying for them at interest over the term of the mortgage. So what's it going on? 30-year amortization for high ratio mortgages, which is CMHC mortgage. So let's call it 10% down over $1 million. That's the new thing. Up to $1.5 million. We don't see people buying a $1.499 million house and then getting 10% down. You got to have an income of about $350,000 a year to do that, and we just don't see it. I mean, I don't see it. Like it's rare. Okay, if you've got an income of $350,000, you've probably got somebody who can get you some down payment, or you've saved up some down payment. You're going to use 20%. But we will see a bunch of $1.2 million purchases using this program, 30-year amortization. First thing to know, you got to be a first-time home buyer. You can't be a move-up home buyer. You can't use it for that program. It's got to be your first home, okay? That's what it's meant for. That's what the whole idea of it is. So 30 years, not 25. What's going on? They will be, by the way, everybody's going to be ready for it. They could do it today if they wanted to. They've all gotten ready. Insurers are ready. Lenders will be ready. Big banks will be ready to go on this program for December 15th. Now, when can you start thinking about doing it? All right, let's break that down. In theory, for one part of this, the 30-year amortization, in theory, you could buy the house today. You could. Because we can test it at 25 years. Hear me out. You buy the house, $800,000 house. You want to use 10% down. You want to use 7% down. And yeah, when you get around 800, you're probably about 7.2 is what you got to have as a down payment. We can test it 25 years. Like we can send the application to the lender. The bank will forward it to CMHC, Canada Guarantee, Sagen, and Sagen will approve it. If you qualify, if everything else is correct, if you qualify, they will approve it on the 20-year amortization. On the 15th or 16th or whatever day you want to do it, you can send in a new application for 30 years and you're going to be approved because you qualified at 25 years. So obviously you're going to be approved at 30 years. By the way, Carolyn Rogers, the Bank of Canada Deputy Governor, made some very reasonable points about this 30-year stuff. Good for the bank. They make, that's 5 years longer. They make a lot more interest. Good for the seller because there's people who are finding it more affordable. Is it good for you? Is it good for you, the home buyer who's borrowing it 30 years? Well, in theory, no, because you're going to pay a ton more interest. And she's right about that. But hear me out too. How many people actually own the home for 30 years? How many people haven't sold or something's happened and there's been a new mortgage? Oh, and by the way, you have tons of prepayment provisions. You can start to pay 10% more, 15% more, 20% more a month. That's going to carve out that extra 5 years. You can make lump sum payments anytime you want. Every time the mortgage matures, say you took a 5-year mortgage, when the mortgage matures, you can pay the whole thing off if you want, okay? Or you can make another big, even bigger than 10%, even bigger than 20% prepayment. You have a lot of options to cut. You're not stuck with 30 years forever. You've got many, many ways to cut that back. So that's fine. Let's get back to the actual qualification. So listen, this is the most important part. There are real estate people out there who are telling clients, hey, I've got a good mortgage broker. I've got a good rep at a bank. We'll just check it all out and figure out that you can qualify for this 1.2 million. We'll study your income. We'll study everything. We'll figure out you can qualify for this 1.2 million. And then we'll go out and put in the offer and we'll buy the house and we'll have it close in January. And then when December 15th comes around, then we'll submit the application and it'll get approved. Don't do that. Don't fucking do that, okay? Don't do the 1.1. Don't do the 1.2 million purchase thing on the basis that you believe that you can do it for 10% down. Do not listen to that real estate agent. Do not do any of those things. Do not listen to the mortgage broker. Don't listen to anybody, because listen to me. You can't get an approval number from either all three of those insurers. You can't get that number. And no matter how much you think everybody involved in the purchase thinks it's going to work out, no matter how many times they look at your income, no matter how many, you don't have certainty. So you're going to be waiving conditions based on the belief that you are going to be able to get that approval at 10% down at 1.2 million. And you only got 10% down. Don't do that. Don't listen to anybody who's telling you that it'll be fine. The 30-year thing is fine because you can test it at 25, and if it works. By the way, if it doesn't work at 25, don't fucking believe those people again either that it'll all work out. Don't believe them. You don't have an insurance binder number until the 15th or 16th. By the way, don't close on the 16th. That's ridiculous. Okay, nobody can get that done. You need like a week after the 15th or 10 days, as long as you got everything set. But hear me out again, and remember this is important. Don't believe anybody who tells you, no. We can have you buy a house today for 1.2 million with 10% down. We have experts who will make sure that it will work after the 15th, and we'll just apply on the 15th and it'll be approved. Don't believe that bullshit, okay? Do not do it. Do not do it, okay? You can't take that risk on yourself. It doesn't make any sense. So, can you do the one with the 30-year amortization? Can you test at 25 and go out and buy the house now because you know that you get a number? You can just send it into the insurer, send it into the lender. You'll get a number at 25. You know you're going to be fine at 30. But don't do the other thing. Do not do it.